Hi, welcome to the Market Alert for Wednesday, the 1st of May 2019. So yesterday, the pound moving higher, and that was because, according to the news media, sterling higher on hopes of Brexit talks have progressed. That's all that was required. So that sent the pound higher yesterday. As you can see, they're back above the 200 bar moving average. Also, you see it there driving through, and also back above the 20 bar moving average. I have no idea about the details of the deal. I am not interested either. But here you can see the market was sideways, and then when news broke that May has headed off back to Strasbourg, the market then moved higher. It stopped at the R3 for a while, but given that it's sideways for some time and quiet, as I've said before, it will take out the R3 when it's quiet and the volatility has been low and move higher, and that's exactly what it did. And overnight, you will see that prices are heading towards yesterday's high at the moment as well. Now, news today is bank holiday today in Europe. We have ours on Monday, but the European markets are closed today. Now, this is good news for the Dow and for the pound. And if we just move through here, we've got this main event this evening, which I'm going to come to now as well. It says here that rates are likely to remain unchanged, and I would agree with this, but there is something interesting developing behind the scenes with regards to this. So that's it for the pound. I would expect it to maintain the upside today unless something comes out with regards to May, but other than that, like she resigns with a bit of luck, but I very much doubt it. Now, yesterday in the Dow, I spoke about not a request, but the prospect of interest rates moving lower, and lo and behold, yesterday, as we see here, with the S&P at all-time highs, Trump demands for the Fed slash rates by 1% as FOMC begins meetings. This is a two-day meeting which took place yesterday. And it says, just in case he hadn't already made his position re-interest rates clear to the FOMC, President Trump apparently wanted to make sure policymakers know their place, and shortly after their two-day meeting began on Tuesday. After calling for QE4, so he's also asked for this as well, and rate cuts earlier this month, Trump now is calling for the central banks to slash interest rates by a full 1 percentage point, which will bring the rate back to 1.25 to 1.5, a level that hasn't been seen more than in a year. And what's interesting is we go down to here, and this is the interesting bit. Up like a rocket if we did some lowering of rates. Now, this is a man who campaigned, or during his campaign, said that the stock market was in a bubble, and now it's become his best friend. Overvalued, and if they do reduce rates, then we are going to see this market move higher again. But there will be a correction, because if you're going to decrease interest rates by 1%, that tells you, that for me is alarm bells. That's not good. That means that the data isn't as accurate as they're actually putting out. And this is why I've just come to this bit here, because it says, up like a rocket if we did some lowering of rates, like 1 point, and some quantitative easing. God, it's unbelievable. Yes, we are doing very well at 3.2% GDP. Fake news, to coin his own words there. But with our wonderfully low inflation. Now, this is the bit. Wonderfully low inflation. We all know this is absolute BS. And I'll show you why it's BS. Because there is a wonderful man. I can't think of his name. His name is John of ShadowStats. John Williams, that's what his name is. Yeah, there is at the top there. John Williams of ShadowStats Government Statistics. This man keeps a website of the true CPI figures and also all of the other economic data. Brilliant website. And this is the chart I wanted to bring you to here. And as you can see, as it says here, that the alternative CPI 1980 based CPI, you can see that we're running at 10%, whereas the US say that it's 1% or thereabouts. And again, we know this is complete and utter tosh, frankly. And we know this, even in the UK, we know that the Office for Lying Statistics, it's the same issue. You just change what's in the basket that you calculate and you can make inflation look like it doesn't exist. And this is why Trump is after this money, and also to save his neck as well. There's one thing that you have to say about him: he's incredibly clever, but by God, he's a pathological liar, as are all MPs and politicians. And now he's buying, or has been bought and paid for, exactly the same as the rest, and just preaching the old record here. Let's get the rates down. Let's print more. The only thing that is actually real is the debt. Everything else is made up. So I wouldn't be at all surprised today if we don't see the market head up to the all-time highs. We need to take out this resistance here, which we can see here. Like I say yesterday, which I'll come to in just a second, 26,700 is the figure we're looking at there. Just getting ahead of myself here. A lot of news around today. So in the bigger picture, this taken out, heading back to here, I don't think they'll drop the rates by 1%. I mean, blimey, talk about acquiescing to Trump. That would be a nightmare. But we'll see what happens. I mean, anything could happen. But yesterday, the market lower, and then the market coming back to close on the highs. And that's when this announcement came out by Trump, or this tweet saying that he wanted to drop rates by 1%. Just shows you what's moving the markets now, and not real economic data, which you could hardly call real anyway, according to Shadow Stats, which is a brilliant resource and one you should go and have a look at. So the market, let's just go back a bit here, because the market went up into double-digit figures in the pre-market session as prices moved higher. It just broke out all of a sudden here. Then some selling came in. We got a bit of a retracement, and then the market moved lower. And you can see we had the sell signal here. The market drops 150 points. We get the buying pressure coming in, and then we get the buy signal here, and then we see the market moving back up, and eventually breaks through the 200 bar moving average, and everything's fine as the market returns back to the upside. Either FOMC assisted, which seems to be something going on here, and then the market gaps higher, and we are seeing prices continuing to move. So it's the old adage, this market is going to continue to move higher. Now, the question is, what if they do reduce rates? Well, the implied volatility is giving the clues. 1 week ago, 1074, 1119. We can see it down here. The lower this goes, the bigger the correction will be. And surely this will, if, and it's a big if, that rates are dropped at all. If they are, then you will see new highs in the Dow. You will see the implied volatility drop, and then it's just a matter of time. It would be very interesting to see if they did drop rates by 1%. That would be something else. I mean, I don't think they even dropped it by 1% in the 2008 crash. I think it came down in smaller chunks of half of 1%. I'd have to go back and check. But that would be something else. To me, that would just ring alarm bells as opposed to being a positive thing. And the only thing that's going to result from that is that the debt is going to get larger. And also this other BS here as well, we could see major records being set, and also at the same time make our national debt start to look small. This is absolute nonsense. How can you print, because Trump apparently yesterday agrees to spend $2 trillion on infrastructure. They haven't got the money. They're going to have to print this in order to carry out the infrastructure, which is great. It creates jobs and things. But again, all you're doing is just kicking the can down the road longer term. So we'll just have to wait and see. So finally, Bitcoin also moving off the 76% retracement yesterday. The range also starting to increase slightly, which you can see here. That's more like it. This is what we're after, this type of activity here, but then it just reverts back to these tiny little bars, and started off with these little bars, and that's the problem. We just need a bit more intraday volatility. The 4 hour better. You can see here as prices are starting to move higher, and inside of here I would look for the market from this high to this low. Watch out at the 5373 level, but starting to look certainly a little bit better there and moving back to the upside. Definitely a new bull market in progress here, but it still hasn't got the participants to shake out of these and be more consistent of these horrible little what are basically no bars really. I mean, they're only about $10 ranges over 15 minutes. But let's see as things move. But there's a lot to see in the Dow and also the pound today. And keep in mind, Italians, Germans, all of the European markets are closed today. FOMC meeting this evening. Just to recap there, we've already looked at this. You can see that here. Let's see what Powell does, whether he does acquiesce to what Trump wants, and take it from there. So that's it for this one. A bit longer than normal, but a lot happening behind the scenes there, and good volatility yesterday in the pound and the Dow. And with that, I will call it a day. As ever, thanks for watching. See you in the next one.